Hi and welcome to this edition of Tigunia's TipTok. Today we're going to be talking about using the deferral functionality within Business Central to spread any expenses that you may have over multiple periods within Business Central. There's a lot more functionality within the deferrals, but we'll just focus on spreading expenses for right now. In order to do this, there's deferral settings that you need to set up, or using deferral templates. I'm going to go ahead and search for deferral templates. So type that in there and go to the templates. Now I have some already set up, so we'll go ahead and open one and we'll kind of explain what those settings are. First of all, give it a deferral code and a description. There needs to be a deferral account. So the scenario here is basically that you're paying for an expense. You're paying a vendor for something that's going to last you throughout a period of time. Maybe it's a magazine subscription or some other kind of expense, and so you need to have an account on your balance sheet that's going to hold those deferred expenses, or at least the balance of that deferred expense. So that's what that account goes in here. Then you also need to decide how much you're going to defer. Are you going to defer all 100% of the transaction that you're posting, and only a certain portion of that? So that can go into this deferral percentage. Also, then the calculation method, how you want that deferral to be spread. And there's a couple of different options here, and I'll demo each of those options here in just a minute. But straight line, equal per period, days per period, or user defined. And so that really impacts the amount of that deferral that's going to be amortized basically on a monthly basis. When do you want the deferral to start, or the expensing of that deferral to start? Do you want it to start on the date that you post the transaction? So for example, if you post it in the middle of the month, you might get a half month's worth of amortization in the particular month that you posted. Or do you want the amortization to start on the beginning of the current period, the end of the current period, or the beginning of the next period? A lot of it has to do with that initial transaction for that initial month. Also, how many periods you're going to be deferring. It could be 12 months or 24 months or 2 months, whatever you need it to defer. And then a description, and we'll talk about this description in a minute. You'll see I've got a couple of placeholder settings in there, and that really drives what that description for that entry is going to look like. So with that, we'll go ahead and take a look at the various scenarios. At least on the calculation method, I have various scenarios that we'll take a look at. So in order to look at that, we'll go ahead and take a look at a purchase invoice that I've created. So we'll go ahead and take a look at this open purchase invoice, and you'll see I've got 4 lines on here for advertising expense. It could be whatever expense you needed to, subscriptions or supplies or whatever. But this is the expense account that's going to be hit with the amortization as the prepaid, or as this deferral goes ahead and amortizes. So I've set up a couple of different scenarios so we can kind of see what it's going to look like. The first one is $1,200 using the straight line method. The second one is 12 months, another $1,200 using this equal per period method. This third one using the days method, the days in the month, and then the fourth one using this should be a user. So let me change that to user. It's actually a user defined method. So now as we look at each one of these, we can go and see how this is going to be amortized throughout the specific period. You'll see here that my posting date is June 20th, so that's going to be important based on the method. So as I click on one of these lines, I can go to line, related information, and then deferral schedule. What this will do then is show me what this deferral schedule looks like by period. So you can see here that I'm showing $36.67 for June, and that is because we told the system initially, as you recall, to start calculating on the posting date. So even though it's going to do a straight line amortization of basically $100 a month over 12 months to get the $1,200, since I told it to use the posting date as a starting date, it's giving me basically a third, or in this case 11 days out of 30 days in the month of June. The remaining months are all $100 a month until I get to June of 2022, where it's going to pick up that remaining $63 So that's the straight line method, basically using an equal amount all throughout the period. If I go to the second one, which is equal for 12 periods, and I'll go to the deferral schedule here, you can see this one is similar, except this one disregards the posting date. So in this case, I'm getting a full month's depreciation or a full month's of amortization in the June time frame, and then getting $100 a month thereafter. So this one is very similar to the straight line, except, like I said, that this one disregards the posting date and just goes ahead and posts the full amount in that period. The third method is the days per month, and so you can see with this one, as I go to the deferral method, that this one also uses the posting date to determine how many days to go ahead and amortize in the month of June, but you can also see that each month is different based on the number of days that are in that particular month. July and August being 31-day months, so there's a little bit more there. September, November, and some of the others being 30-day months, and so it's getting a little bit less amortization. February at 28 days, and then finally the June of the following year getting that last transaction, or the remaining balance posted in that amortization. So you can see those three. Now the last one is user defined. Okay, and when we go to this last one, then as I go to the related information, you'll see when I open the deferral schedule for the user that this is blank. And so it's going to give you now an option to set those periods, and so you can set whatever amount you want. You can do, 150, 100. You can set all of these to whatever you need them to be, in a particular month. Just depends on how you want to transact it. But as long as you have all of the months. And down at the bottom, it adds it up for you so that as you start to get close, you can make sure you have the correct amount of periods going, or the correct amount to defer. So I can go ahead and close that. Now I'm going to go ahead and post this transaction. We'll kind of take a look at what the system's going to provide us then. So it's gone ahead and posted that. Now as I slip over to my general ledger entries, we'll take a look and see what it's done. And let me sort that in descending order. So you can see it's basically set the deferral method for each one. So let's go back up here to the kind of that first straight line one, and we'll see the transactions that it posted as I scroll back up here. Okay, so the entries that it posted is first an initial debit to account 60200. That's the account that we want to write off the amortization to. But the first thing that the system does is post to that account, and it also posts a credit to AP, which is up a little bit higher. Then what the system does is goes ahead and credits that same account for $1,200 and debits the 10610 account. You recall this was the account, the deferral account. So it posts it into there, and then every month, you see here's June, it goes ahead and posts the debit to the 60200 and the credit to the 10610 account for June, and then July and August and September. So each of those transactions is being posted at the time that you post the purchase invoice. You'll see here, you'll recall those codes that we looked at, and we'll look at them here again in a minute, where you can put some placeholder codes in the description so that it gives you at least a better description than just saying expenses deferred. It'll actually give you the month, so when you look at the transactions, so you can see those months. So all those transactions are basically posted in here for each of those 4 different periods and all the different amounts as we expected. If I come up here to the top, you'll see here's the credit to the vendor, the AP account for the $4,800 that went into that. So you'll recall that description. So if we come back over here to the deferral templates that we set up and take a look at that description again. So if I open up the straight line, you'll see here that expenses deferred for percentage sign 4, percentage sign 6. And so what's showing on the screen now is basically a little key as to what the different numbers are. 1 through 6 will give you different options on what you can put in the description, so it allows you to do that. Now I wanted to also show, and what we're showing here is the different methods. You recall that when we looked at these, we looked at different calculation methods, but the same start date of using the posting date. So on this graphic here, you can see that we've got the 4 different scenarios again of the calculation methods, but what I'm also giving you is the different start dates. So the starting date of posting date that we used here with the different allocation methods. Beginning of period, if you use the beginning of period, it's fairly close to the same except for that initial period. So in June, since in this scenario we're telling it to use the beginning of period as its starting date, it's giving basically a full month in that opening period of June, even though we didn't post the transaction till the 20th. So that's the difference there. If we use the end of the period, then it's actually going to use 1 day for June 30th, 1 day to post a transaction for the straight line and for the days of the period. Equal amounts, remember, disregards the posting date, so it's going to give you that full $100 in the for each month. But the other 2 are going to give you 1 day, since we told it to post or amortize as of the end of the period. So it gives you that 1 date and then the full periods after that. You can also set it to beginning of next period, and then it'll start the amortization similar to the beginning of the period, but it'll delay it a month. So if I'm posting June 20th, this will go ahead and start on July 1st. You'll also notice that this is the only one where the equal period actually will reflect the fact that you're using a posting date and it's starting the next month, and so these will all start in that following month. So this basically giving you that look at to what are the different options and how those are posting. There are a couple of issues with this that I wanted to make sure that you were aware of, that I'm not really crazy about, to be honest. One is all of the periods have to be open for you to post this transaction, because as you will recall from the general ledger transactions, that this is posting all of the transactions for all of the periods. So all of those accounting periods have to be open and available for you to post to. Secondly, if you have to reverse any of the transactions, it gets very difficult. You basically have to manually post some reversals if you need to stop the amortization early for some reason. That doesn't really help very well. But otherwise, this is a good vehicle for basically taking those payments that you pay once a year and amortizing them throughout the year. It gives you an opportunity to do some easier processes, so you don't every month have to post a recurring entry to amortize those prepaids. There are some additional ways that you can do this. I've seen companies use the fixed asset journal actually to do some amortizations, and I'll show you that in a future video. Once again, if you like these videos, go ahead and subscribe to our channel and click the bell button next to the subscribe to be notified of future videos. We really appreciate you taking a few minutes to look at this functionality. Let us know if you have any questions. Give us a contact, and we'll be glad to answer any questions that you may have on this subject or any other subjects. So have a good day. Thanks for attending.